Yes.
Let's talk about financial statements real quick.
Let me interrupt 1 minute and go back, because what you were talking about, what you were saying about a transaction attorney, we use those all the time, closing attorneys. Okay, but and they represent the transaction, they represent the offer, the agreement, the deal, whatever you want to call it. That's all they represent. But in our closings, in our transaction, we have 3 attorneys actually involved. We have one for the buyer, one for the seller, and then one for the transaction. Now, at the closing, the seller's attorney doesn't go and the buyer's attorney doesn't go. It's strictly the transaction attorney, but everything's already done by them. The documents have been created by the transaction attorney according to the offer to purchase. And then all the documents are sent to David, who represents the seller, and then sent to Susie, who represents the buyer, and the changes are made and everything, and your negotiation is actually with the transaction attorney, and then went back and forth that way. And what that usually does is that ends up keeping the deal together, because if David represents the buyer, and you represent the seller, and David represents the buyer, and David draws up the documents, does anybody here want to venture which side that document slants to? So that's why we use a transaction attorney, and in that way, usually the deals get done. If you have one attorney doing the deal, doing the documents and everything, it's going to be slanted one way. The other person isn't represented as well, and it's all, so it blows up.
It looks better to you.
Okay.
In terms of the financials, we use that term loosely, but there's 3 types of financial statements. There's audited, where an accounting firm will put their stamp of their brand saying these are legitimate. There's reviewed, in which they'll say, I'm the accountant, I've looked at this stuff, generally it's okay. And then there's what's called compiled, which is basically the owner has done some things in QuickBooks and printed it out. How big of an issue has that been in your business in terms of the level of financial statement or creditworthiness?
Usually it's not. Usually we're dealing with compiled, where the business owner takes his QuickBooks and a shoebox is full of receipts and everything to the CPA, and they just go through and boom, that's it. Most buyers will buy a business, because our arena is usually in this business selling for somewhere around 300,000 up to maybe 5 million, 10 million at the most. Then you get up into the M&A. When you get up into more the M&A, then yes, you're talking reviewed and everything else. And then it becomes more of an issue. Down in the under $5 million asking price, it's usually not that major of an issue.
What's M&A?
Merger and acquisition.
Oh.
That would be like
Penske buying Saturn.
Yeah.
Yeah, exactly.
Merger and acquisition
Be by you.
means acquisition.
Yeah.
No, I mean
YouTube deal or something.
the merger. A merger is when 2 companies come together and then one company survives. An acquisition is when you buy the stock or assets of another company. But M&A is a common term that's used to describe the acquisition of a company.
And M&A is truly a misused terminology. A lot of brokers, a lot of people say M&A is like when you're up in the 5 million plus, 10 million, 50 million range. M&A could be down in the $400,000 range. M&A is more the process. It's more of one business buying another. It's more of how do they do it? How's the process work? Is it on the quote unquote Main Street mid-level market? Usually you take the business, you package it up, you put everything out on Biz Buy Sell, a couple other different websites out there, and the buyers are searching the internet, find it, call about it, and away we go. They put an offer in. In the M&A arena, merger and acquisition, you're actually targeting the companies that you want to sell this business to. And it's a whole different process.